everyone. This is Dee Lawson. Today is August 14th, 2020, and this is session 3 of preparing for your long-term goal of investing in the stock market. As I have previously stated, I am not a financial advisor. I am basically an investor in the stock market. And these are just some of my ideas of how you can become financially stable in the stock market. So, beginning, you must understand the difference between saving for the future and investing. Once you have your assets and liabilities established, then you can go on to make sure you have your budget in place. At this point, you might want to determine your risk factor. Do you want to have a conservative approach or a more riskier approach? You can decide that by determining how you want to invest in the market in the first place. You need to know the difference between a defined benefit plan and a defined contribution plan. Most of the plans nowadays are defined contributions, whereas in the past, companies took care of our retirement by having defined benefit plans. Now, that obligation is on you, the employee, to figure out how you want to invest your money for the long term. You need to understand that before a retirement, to get your money together and retire, it's called the accumulation phase. That's the accumulation phase of your retirement. After retirement is your distribution phase. You need to consider carefully your wants versus your needs. Determine how long it will take to pay off anything that you are interested in acquiring that's going to take a lot of your money. You need to determine, is this a want or a need? And how long will this take for you to pay off that per hour of your pay? Taking charge of your debt crisis. You need to ask creditors for a lower finance charge if that's appropriate for you. You can check debt consolidations through reputable companies by going to N like Nancy, F like Frank, CC Charlie.org. That's nfcc.org. You only want to go to a debt consolidation firm as a last resort, though. Do not use debt relief companies because they charge high fees. In the last session, we talked about the need to have a good credit score. You need to know that all debt is not bad. You need some credit to establish your credit score. You can go to annualcreditreport.com for your free once-a-year credit report. Your credit score assists lenders in determining how credit-worthy you are. If you anticipate ever getting a loan for any kind of major purchase, you need to know your FICO score. And that's where you will find it at annualcreditreport.com. That's the once a year free report for you. You need to have an idea of where you are. Do you want to, will you be saving for short term, long term? And that depends on, how you've determined you want to spend your retirement or spend your later days. These are some of the accounts you will definitely need. You'll definitely need a savings account for your short-term emergencies. You'll need a checking account to pay your bills. You'll need an emergency fund. You can check that for the highest rate. Some more than likely that might now be online. You can consider money market accounts for higher interest rates. For short term, you might consider a CD, laddering a CD over time, like depositing a CD for this month and maybe next month, another short-term CD, which matures over a shorter amount of time. For your longer-term options, you might want to consider IRAs, saving bonds, T-bills, stocks, mutual funds, annuities, commodities, coins, collectibles, and gold. These are riskier avenues. Stock market is volatile and it is risky, but for the majority of people in America, you will need to invest some portion of your funds into the stock market just to keep relevant in the future and to keep track of your inflation costs. It gives you the better option of keeping track of your better track of keeping track of your inflation costs. You must be aware of fees, interest rates, social media scams, caregiver and relative scams, giving out your information over the internet, social security numbers, account numbers. Be aware of pressure tactics, ID theft. Whether you have a managed account or you manage it yourself, you have to be available to check on your account on a regular basis. That's not an option. You have to, whether you have a managed account or not, you've got to take time on a regular basis and double check. Selecting a financial advisor. If that's one of your options that you would like to pursue, you must interview at least 3 to 5 before making a decision. This is my recommendation. You'll get a lot of different advice from different advisors, so you need to make sure that your advisor is a fiduciary advisor. You need to know what you need your advisor to do for you. You can check online with the different financial companies like TD Ameritrade, Fidelity, Vanguard, Charles Schwab for free initial advice. regarding a financial advisor. You can also go to brokercheck.finra.org to check on a broker before you hire him. Be prepared for scams and frauds. That's basically it for this session. And in the next session, it is all going to be about investing. If you've gotten these 4 steps accomplished, then your next step is to invest. But you cannot invest until you know yourself and you know what it is that you have and where you need to go. You have to have your assets and liabilities outlined for you. You need to know what those are. You need to make sure you have a budget outlined. You need to have all of your information at your fingertips so that you know what it is that you need to, what monies you have coming in, going out, and what you have available for investing, because that is separate. If you don't have those things available for you, you'll take money out of your investments and you'll have to use that to live on, and that is not investing. That would be a trader. If you have to sell at an inappropriate time, it would be unfortunate for you. So in the next session and the last session on financial accounting, financial advice, I'll be addressing why invest, investing in ETFs, who needs to invest in these, whether you're pre-retirement or post-retirement, a little advice on individual stock purchases, and some of the terms to understand. Thank you again, and hopefully you will be able to get some information on how to get started in investing from this session. Thank you and have a great day.